What's up, Big Easy?
Not much, man. Having a cigar, drinking some wine.
How are you enjoying Florida?
I love Florida. It's great.
For those of you guys that don't know, this is Big Easy, a CEO of E16 Media, formerly the Mentor Me podcast, which is where I met him. This is his second time to the Americas.
Well, to Destin, or Miramar Beach.
To Destin. He's from Canada. He's an Uber, a Mountie.
Yeah.
And he's been coming down here to help me with various projects. We've been having a good old time in Destin, and right now we're kicking it at cigar bars, maybe a couple blocks from my house, and they'll kind of close this thing off and let us hang out once in a while when we're stressed and we need to just chill. So
Nice Saturday night hang.
a little bit of a Saturday afternoon hang.
Yeah, afternoon hang. Yeah.
But correct, yeah.
So your hedge fund. It's very interesting the way that everything's set. Because usually you think about a hedge fund, you're thinking about a guy. He's got a whole bunch of investors, and maybe he's investing in a small business, or maybe he's trading, whatever it is. But yours is kind of different. Like, when did you guys kind of think of this, or develop this type of hedge fund?
So, ours is a little bit different, and it's originally developed just to trade my own money. So I got into developing this for one specific reason, that a hedge fund is like the best vehicle to personally trade money. So 99% of the hedge funds in the U.S. are not like what you would think of, like the Warren Buffett type vehicles, like where you have like billions and billions of dollars. Most of them are like two-man shops.
Yeah.
And they pull their own money and friends and family money,
Yeah.
and then now you have this like a vehicle that's better for taxes and business expenses and so on and so forth. And so the original basis was for me to put my money in there and trade it and build my own software and do all this stuff, because a gentleman by the name of Chaim Bodek, who's like a high frequency guru, he came to work for me, or with me, a few years ago. And I had seen him on this documentary, Wall Street Code, about how high-frequency traders are basically screwing over retail traders through literally just like 1 penny per trade transactions, right? From gaming the system and selling off your order flow. And so, I got into contact with Chaim, and originally we were working on special routing and special configurations for my own self. And Chaim was pretty cool. Like, he gave me, when we were talking, he's like, well, what are your goals? And I'm like, well, I'm trying to get this next level. I'd like to make, $10,000 to $20,000 more a month in my trading. So I think I got to learn some new strategies or do this or that. And he goes, well, because he's an algo guy. He doesn't actually believe in mindset, the discipline, the trading psychology part of it, because he's a quant.
Yeah.
So the quants only believe in the numbers. They don't actually believe that discretionary traders, through discipline or building of habits, that has anything to do with anything. It's just a numbers game for them.
Yeah.
And so I was explaining to him, like, I'm like really working on my chi right now. He's like, what? I'm like, yeah, man, I work with this performance coach and this and that. I'm trying to get to the next level. And he's like, well, what do you want to do? I'm like, well, I'd like to get here. And he's like, well, dude, you don't need to say woosah to yourself 100 times to get there. Let me show you this. So he says, look, Google this. And so he says, Google payment for order flow. So you Google payment for order flow, and what you see is that most of the retail brokerages, they sell off their order flow to hedge funds, high-frequency traders, different groups of people, and they let you peek at your order before a trade is taken.
Yeah.
And so initially the retail traders getting screwed out of literally a penny, millipennies, stuff like that, but it adds up overall the trade. So, I am saying, look, if you look at Ameritrade's perspective, it said they made $700 million this quarter, but 280 of it came from payment for order flow from Citadel, high-frequency traders.
So is it just like computers that are finding these trades in milliseconds and then getting in before?
No, so it's like you hit the buy button,
Yeah.
and say you hit market order.
Yeah.
So market order really means like you're willing to take anything.
Yeah.
So there's a lag between when you hit market order and your order gets filled.
Yeah.
And so in that second, is where all the shenanigans will essentially happen, right? It's not an instantaneous process. And I used to see it at Ameritrade all the time, like I'd be hitting limit order. So say like stock's at $2 and the ask is at $2.02.
Yeah.
And I'd buy 5,000 shares at the limit and it wouldn't fill, like it would jump. Like anybody ever see like where it jumps like the second that you hit it? Like it jumps up a penny and you're like, fuck.
Yeah.
Like I can't be in this trade. And so then you have to raise your offer again. And you raise it up a penny and it jumps. And now mind you, like we're playing breakouts, right? So you're catching something that's about to start moving. So it's like you're just chasing it up a penny. Then finally I'd get frustrated and just hit market order. And I'd get filled at like 210. And it was like you started this thing at $2.02.
Yeah.
And now you're here at 210. And then you know what happens as soon as you fill at 210 when you do it this way? It'll drop down 3-4 pennies. And then you sell it because you're like, oh my God, it's going down.
Yeah.
So now they're making money on both ways, right?
Wow.
So then you sell it and you're like, and then it goes back up and you're like, oh, and then you're in that game again. So you chase it.
Yeah.
And you buy back higher. And this happens all the time, especially to people that are buying too high or they're playing fast-moving stocks.
Yeah.
They don't get filled at the right spot. And so those pennies, they're hard to notice unless you know what you're looking for. And he knew.
Yeah.
And so he showed me. And he's like, well, what if I told you that I could help you save 1 penny on every share that you trade? Because I trade like 1 million to 2 million shares a month.
Yeah.
And the last few months, like some months I go to 3-4 million shares. So he goes, well, what's 1 million shares? And imagine every share you saved 1 penny.
Yeah.
And he's just rounding, right? Some you may save 2 pennies,
Yeah.
1/4 penny. But he said, what if I can just save you 1 penny on every single share out of those million shares? How much would it be? And I'm like, oh man, I'd hit my goal.
Yeah.
And he goes, look, you're looking at this as you need to make big changes in your life. You need to make these like drastic things and do that. But he goes, trading and many aspects of even life is just a game of pennies.
Yeah.
And that 1 penny can turn you from wherever you are to wherever you want to be.
Yeah.
And that was actually really impactful, not just in the trading aspect of doing the computerized stuff,
Yeah.
but it was really in terms of even my own thinking of like, wow, like that 1 penny would actually have me hitting all my goals. The 1 penny.
Yeah. That's crazy.
And you feel like you're so far away,
But really, you're not.
but then when you think about it, like I'm trading like $10, $20, $30 stocks.
Yeah.
What's 1 penny?
Yeah. What's 1 penny? Yeah.
It's really nothing, right? It's being one small, less than 1% better, and then you're there.
Yeah.
So go figure. Life lesson for not just trading and software and stuff like that, but just
Overall.
overall.
Yeah.
Go figure.
So, like, what happened after that conversation?
So Chaim and myself, we put together a structure. He made some relationships for me with people that he knows in New York and lawyers, all that stuff, and we were off to the races.
So, like, now, I mean, you have like a bunch of your students that trade with you, right?
Yep.
So, like, how does that work?
So my students have finished my class. I have, my 60-day boot camp. We got mentorship programs where I do, train people one-on-one.
Yeah.
People that complete this course and they go through the program, finish their homework, quizzes, all that stuff. I may allocate a certain portion of monies for them to trade with. Something very small, essentially a tester,
Yeah.
like an incubation,
Yeah.
to see if they're any good. And, still a good chunk will flame out, but like you're looking for the people that, right, have what it takes, and then essentially you scale them up. And so like we have a rule, like, for every 2 weeks you're profitable, we'll raise the amount of cash you get to trade with, or the amount of shares you get to trade with. And that's really important when you're trading, is to be able to slowly step up your game, but based on rewards and goals versus just, hey, I have X amount of experience and I'm gonna start training.
So like proving yourself, basically.
Yeah.
So you have like
Small steps.
Yeah. So you have like a risk manager or something that that basically watches these guys and
Yeah.
Yeah.
So we have 2 risk managers. One of my friends, Tim, one of our old students, Chai.
Yeah.
They're full-time risk managers, so they're monitoring all the traders' positions. And most of these guys are trading very small, right? Because it's incubation. 100, 200, 300, 400, 500 shares. So they prove themselves. And so they're monitoring. Oh, this guy just had 5 losses in a row, 2 losses in a row. Maybe we should reach out to him or cut him off. You know, he's approaching his daily max pain. Let's give him a call, see what can happen. And so, you know, the whole point is to slow down the process of what all new traders will inevitably go through at one point, which is the account blow up.
Yeah.
So the account blow up for some people can happen when they're unprepared. Even if they are prepared, I've seen it happen in days, less than days. I've seen numerous people do it in one day.
Yeah. It's easy to kind of get out of control.
It's easy to get out of control, especially when you have high expectations and you're just like really excited.
Yeah.
You know, sometimes it has nothing to do with like, oh, I trained or not trained. Sometimes you just get really excited and things got out of control. Yeah. You're like, holy crap.
Yeah, I mean, especially
I'm going to jail tonight.
Like if some, I mean, anyone who like, you know, I know for me, like, you know, someone who wants to make a lot of money and you're like in a hedge fund, like you kind of get into that mindset, like I want to make so much money, but that causes, I guess, mistakes, right?
It does, and that can, you know, that kind of expectation is what can really get you, because in the market, you know, our main advantage against hedge funds, smart people, our main advantage against these people is our ability to be opportunistic, right? And so the minute we need the market to do something, or the minute we need the market to give us money for a mortgage, whatever, we lose that one advantage that we have. You know, of course we have our training and stuff like that, but we're still playing against the smartest, most crooked people in the history of the world, and the richest. So your advantage is, I don't have to be in the market all the time, because I only need 1 or 2 good trades to actually hit my goals. Versus, right, a mutual fund has to have 100 stocks, and they have to all be doing X, Y, Z to hit their goals.
Reporting to a whole bunch of people.
Yeah. That was really weird, wasn't it? Maybe a little bit gross. No, but I mean, I think that's the thing is, and that's what's killing new traders is when you have to have the market do something for you, you need a stock to go up. You need the market to go up. Because you've got your mortgage or your tuition, your kids' things, right? We all have goals. The minute you need the market to do something, it always does the opposite. How many times have like anybody, like you bought the top of a stock and then you sold the dead bottom and it exploded, right? And you're like, how can that just happen to me? Like, how can I be the exact bottom of a stock? But shit happens. It happens all the time. It happens to me too, right? And our advantage is that we only have to be in 1 thing or 2 things or whatever it might be. And so we need to keep that kind of objectivity of, I'm laying in the weeds like fucking Rambo, waiting for the right moment.
So like when you're looking, I mean, you've obviously dealt with tons of traders in your hedge fund. Like, what do you think separates the ones that, you know, are killing it from the ones that maybe, you know, bow out or are having a tough time?
So it goes a couple different ways, but I think one of it is the resiliency aspect of, usually when you lose one time in anything, but especially in trading, you start to reach, like force the issue. Like you lose one time, and rather than just brushing it off as a numbers game, you take more of a gamble the next one. Or more of a trade for the next one. And so what happens is you start to spiral out of control, but the spiral starts really slowly. Like you never see a trader and he just wakes up in the morning and right off the bat he spirals out of control, right? It's a slow thing of He starts off, he loses 50 bucks. Then he's like, shit, I better risk more. And I lose 100 bucks. And then I lose 200 bucks. Then lose 1,000 bucks.
Yeah.
Right? And it's like that spiral that
Becomes like
happens.
kind of like a gambler's mentality.
Yeah, because you're reaching right, at this point, and you don't know where the cutoff is, but you know that you have to make the money back at some point.
Yeah.
And nobody wants to do it slowly and make it back over 2 months. Right? That's like crazy.
Yeah.
But that's the kind of sometimes the only thing that can happen.
Yeah.
So, you know, the people that can just kind of brush it off, like they say in football, like you know, right, a quarterback has a short-term memory. Right? You throw an interception, and then you have to like go right back and just like it's a new game, right? And then you got to go out and do what you have to do. The short-term memory, and traders have to be like that too. So you lost, but with the next trade, you don't have to treat it like you lost.
Yeah.
And so having that short-term memory, I think, is really important. And the other thing is, the best ones that I've seen, at least in the new ones, they have a specialty or like a type of trade that they do that they're really good at, and they really just sit there and wait for it. Like, I'm only going to do this. I'm a one-trick pony.
Yeah.
Now, I'm not a big believer in like when you're trying to get really, really big into trading, like to be a one-trick pony. But in the beginning, when you're trying to build your account, it's huge because you're like not sitting there taking 1,000 trades. First of all, if you have a $2,500 account, you can't take 1,000 trades. So you take 5, 6, 7 trades. All you're doing is just setting yourself up for that one big disaster.
Yeah.
Right?
Yeah.
The more trades you take, you're setting yourself up for that one time you fuck up. And so, like, the guys that do well is like they're only trading 1 or 2 types of things, a very specific style, and they just wait for it, and then when they see it, they hit it.
Yeah.
You know, versus like, oh, I gotta be in this, I gotta be in this. Like, I got one guy right now, man, he's like, I'm looking at his trades, I'm like, yo, B Money, he's an Indian guy. Indian guys, you know, I get a lot of Indian customers because I'm Indian, so I'm like, yo, B Money, what's up? I won't mention his name. I'm like, what's going on with these trades?
Yeah.
He says, well, the problem is I'm hitting my max loss. Like, all the stocks I think are going to go up, they go up. But I'm hitting my max loss at like 9:40 in the morning. And I'm like, 10 minutes in the market?
Yeah.
I'm like, how many trades are you taking in those first 10 minutes? They're like, well, you know, as soon as the market opens, I'm in 3 or 4. I'm like, you have $2,500 account, you're in 3 or 4 stocks, right off the bat, before even a pattern emerges.
Yeah.
And he's always feels the need he has to be in something. You know what I mean? So like it's having trouble getting past that. Versus, hey, I'm just gonna wait for this one setup. I'll stock it all day if I have to, and then when I hit it, I'm gonna make $300, $400, $500, which on a smaller account is still a lot of money. And even on for any amount of account, money is money.
Yeah,
right?
for sure. So like realistically, like say focusing on one setup, like where do you think the ceiling is in terms of gains?
I mean, look, there are people like that build whole businesses off just one setup, right?
Sure, yeah.
I mean, look at all these like websites and stuff. Like, oh, I trade this, or I trade this. I saw one guy; he's got a website about fucking VWAP. I mean, VWAP is an indicator.
Yeah.
He's got a website about it, and it's actually a nice one.
Yeah.
I'm like, oh shit, this guy really knows a lot about that.
Yeah.
You know, there's
He's
people.
mastered the VWAP.
Yeah. There's I short penny stocks, or I do this or that, right? There's like people that build businesses around niches.
Yeah.
So it's not necessarily like it's like your life is limited.
Yeah. So, you know, back to the whole quant thing, like what is that exactly?
I mean, quants are just people that define the market in mathematical ways, right? So they're taking all the emotion and thinking and variables out of it in terms of X, Y, Z. It's like if I see this, I have this, and this, I do this.
Yeah.
Right? And then my risk is here.
Yeah.
Which can work, but a good discretionary trader that has skill set, but that can think on the run and adapt, yeah, he's more prone to make a lot of mistakes because obviously he's computing dozens of variables at any given time. But because he's able to call audibles and move quickly and shift, even on his own rules, the amount of returns he can make are so many more times.
He
right?
can be opportunistic, I guess, like you were saying.
Opportunistic, right? So like like a quant might make like 3 or 4 or 5% a year, or whatever it might be on their particular type of program where
But they got probably huge money, so 5% is.
they leverage it,
Yeah.
and they leverage it, right? So it's still good money.
Yeah.
But discretionary trader, he's seeing things, he's reading things in the market in particular ways things change. The amount of money he can make is huge,
Yeah.
but also the failure rate is so much higher because obviously there's that discretion involved
Yeah.
of a human error.
Yeah.
But human error is what makes things also amazing.
I mean, yeah, because just hanging out with you and seeing you trade, I can tell that you love to freaking trade. Like,
Yeah.
trading is your thing.
I'm the man.
Like you're hyped up.
No
and,
words.
I think anyone would want to live like that. Like wake up, be happy what they're doing.
Yeah.
Fucking getting hyped up all the time. Like, so I don't think quant's probably not the thing for you.
No,
Yeah.
it's fun. But
Yeah.
also on the other side of things, right when I lose, I'm like, I'm really annoyed with myself.
Yeah.
Because it's always my own fault. Too many shares of this, was too loose on this, wasn't prepared on this,
Yeah.
got surprised on this, whatever it might be. When you lose it, it's your own fault, and that's the awesome part and the tough part.
Yeah.
It's awesome because it's on you, and so you can correct it, and it's your responsibility. The tough part is you got nobody to blame.
Yeah.
And that, right in this culture, it's like I want to blame my parents, my dad. My dad didn't love me. My mom didn't love me. I didn't come from the right home. I didn't come from the right school. These are all valid things,
Yeah.
but it's not.
When it comes down to it, training's a one-man game.
You still have to go out and do what you do, no matter what, right? We all have like things that are against us.
Yeah.
But we still have to go do something.
Yeah. So like when you do lose, are you pissed about losing the money aspect, or is it more like
No, it's not the money.
the
It's
fact that I fucked up?
It's the mental mistake.
Yeah.
I had it one day, right? I was hyper the last 4 days of the week, but I think it was Monday or whatever you got here. I traded and I went up in my room and took like a 2-hour nap.
Yeah.
I never take naps. I'm like pretty energetic throughout the day. I like waking up early. I like staying up late. Like I like being up and fucking pounding it all day.
Well, even yesterday, when you were on your laptop, I noticed just at the corner of my eye, you were on your laptop and you're even moving your feet because you're just so always just energetic. And I was just laughing to myself. Just I know in the corner of my eye, just your feet go like this.
I'm trying to burn some calories, man.
Yeah.
I was flexing my calves.
Fair enough.
Work them out. No, I'm just kidding. Yeah, I had trouble sitting down sometimes. But yeah, that day, I laid in my room for a couple hours, took a nap. I never take naps, but it was because I was emotionally drained because I made a mistake, then I was fighting the stock.
Yeah.
And I was fighting it all